Boy, you weren't kidding. That moving average really was a secret to our success, wasn't it, guys? But you know what I always say, you're only as good as your next trading opportunities. Let's get back to work. Let's roll those sleeves up. If I had sleeves on right now, I'd be rolling them up here with you because it's that time of day again here, folks. It's Wednesday evening. It's March the 27th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Remember, I help new traders find consistent, reliable, dependable, profitable opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities that we see setting up for tomorrow, Thursday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and euro on tonight's video newsletter. I'm going to jump in here first on oil tonight because oil really kind of embodies really kind of the overall topic of tonight's video newsletter, tonight's nightly newsletter, because here we have a combination of multiple trading ranges. I'm going to talk about blending ranges a lot tonight because as you can see here, we got the oil market, of course, starting off inside of our trading range. And then, of course, finishing the session inside of a trading range as well. Now, these are really important because, as I mentioned in previous videos, right, it's all about what came first, right? We first had that big range around that big round number at $60 a barrel, and I'm expecting us to want to go back into that range, right, at some point tomorrow. So how do we get there? How do we get back into that trading range again? Well, that's the goal now of this smaller trading range. The smaller trading range has a bull bias, right, into this tiny, whether you want to call it a range or you want to call it a triangle. It's consolidation, lots of flat moving averages there, right, piling up on top of each other, overlapping candlesticks. It's a range-bound market. And whenever I see a bull market into a trading range like this, I always know I'm looking for buying opportunities really in two places. One is just below the range, and the other is just above the range. Now, of course, I've got specific buy patterns I'm looking for below the range. And, of course, I'm looking for very specific types of patterns to buy the breakout above the range. But this is a great theme for tonight's video, and that is blending these two ranges. I've got that large range telling me to get back up into it. Then, of course, we also have that small range, right, which also gives me the very small details that I need to plan my entries for the breakout and see if I can catch those sellers failing as we go lower. I'm going to dig into this a lot deeper on crude oil in just a few moments, so make sure you stick around if you're an oil trader like I am. How about the S&P tonight? S&P is very similar, right? Definitely different, right? Definitely a little bit different than the oil market. But you can see again, we start off the day today inside of a range. We finish the day today inside of a range. They're different ranges. One range tells me we're going back in. The other range tells me not so fast. You can see those buyers got rejected here. Now, on the S&P and on the Nasdaq tonight, I've got another big clue, and that is that hidden channel. So at this point now, we really have a lot telling us. I'm looking for buying opportunities at the low of that hidden channel, maybe a bounce off that big round number. But at the same time, though, if we go higher, we just saw complete rejection from those buyers. And so I want to be a breakout buyer here, but I'm looking for a couple very important patterns. I'm going to go into those patterns here in just a moment here on the S&P. Over on the Nasdaq tonight, Nasdaq is very similar here, right, to the S&P 500. Started off with a range environment, that big move down, right? Now they're trying to go back up into that trading range. I want to be a buyer here on this right now, but the problem is we finished the day inside of another range. Right? I don't want to buy high. I don't want to buy the high of that range. I want to buy now below the range. And of course, I've got that hidden channel now I'm looking for. And I'll tell you, there's a lot of opportunities here we have, right? If we can play our cards right and get in with a good entry right off of that low. And of course, at the same time, if this thing just takes off to the upside, I've got a couple patterns up my sleeve we'll talk about here to buy as this market goes higher. Because as you probably have noticed, right, you can't just buy a breakout of this because a lot of times breakouts will fail. I'm going to go into a lot more details on how I'm going to buy this market And what does it mean, or how would this market turn to be a bear market as well? We're going to grab a look at that in a moment here on the Nasdaq. Over on the gold, we're going to break a little bit away from that blending ranges, but we've got a range in the gold here as well. We talked about this last night, right? We knew that there was the ECB and Brexit stuff going on today on Wednesday. So, we knew that there was going to be a little bit of chop around, and we definitely got that chop right inside that trading range. You'll notice, though, we are just a few points away from reaching a major objective for the bears here on the gold. We also have what appears to be, right, a spike in channel coming down. Call it a spike in channel, call it a hidden channel. Something tells me that we're going to see some sellers get a little bit too aggressive down here, and I think we're going to be able to use those sellers' stop losses as an easy way to go right back up into that trading range. I'm also going to give you some opportunities here. If we don't see it, if we start getting stuck around this measured move here, how we can sell back down from that hidden channel as well. I'm also going to talk a little bit about rollover tonight. We got rollover watching here for tomorrow. I'm going to grab a look at that market analyzer here inside the charting software in a moment as well. So make sure you stay tuned on gold, because I want to make sure you get the right plan here, right, for tomorrow. And of course, over here on the euro tonight, boy, that euro, it was all about the moving average, wasn't it? It was all about that moving average. How do we respond to that moving average? What a great example of how we apply the lesson from last night's newsletter in today's markets. Hope you guys had a great day there on that euro. But the problem now, though, is, right, like I mentioned earlier, right, we can't keep basking in our own glory for too long. We got to get back to work. The euro finishes the day off with a bear market into a very, very small trading range. And then surprise, surprise, we see a buyer failure off the high, and we should be shooting back down to that low. I've got that big round number waiting down there. I'm expecting 13,000 to be on our radar here. But of course, always, right, anytime I see a trading range, I want to look for that buying opportunity going back up into that, right, into that trading range, and possibly a big pendulum swing right up off of that low. I'm going to put both sides on this together. We'll talk about the sell side. We'll talk about the buy side here on that euro. But I would expect this euro to try to go lower here. And of course, as it gets overextended down there, I got a couple patterns I'm looking for to be a buyer off of that low. So make sure you stay tuned. I got the euro, the gold, the E-minis, the Nasdaq, the oil. We're going to break all this good stuff down here tonight. But before we jump into those charts, though, I want to make sure you never miss the next great trade that we see setting up here on this newsletter. Make sure you join our mailing list. That way you never miss a video and you never miss that next great opportunity on no matter what your favorite markets are. Don't forget to do that, to join our mailing list. Just head over to sidewaysmarkets.com. If you're here on the blog already, it's right at the top of the page. If you're on our YouTube channel right now, it's in the description of that YouTube video. And while you're here, just give me your name and your email address, and then hit that subscribe now button. Now remember, when you hit that subscribe button, you're not done at that point. I still need you to go check your inbox, check your spam folder, check your inbox to make sure you find that welcome email, because inside that welcome email not only is a verification link to make sure I know I have the right email address, but I'm also going to send you a bunch of goodies inside that welcome email, so you and I can get the most out of working together every evening on this video newsletter. So take advantage of the trading, take advantage of this mailing list, join the mailing list, that way you never miss another great video. And also don't forget, tomorrow morning, we're going to be in our trade room like we are every morning, Monday through Friday at 8 o'clock Eastern time. I would love to see you there with me. If you can't be there with me to execute the plan with me tomorrow, the next best thing is to grab all the charts that I'm using in tonight's video. You can get access to all those charts. It's right below the video tonight, right here on the blog at Sideways Markets. Just scroll right down. And also, too, while you're down there, don't forget, if you have any questions, any comments, concerns, any feedback, how can I make this video even better for you to learn and earn? I would love you to give me some feedback in the comment section, right? Post a comment below the video here on YouTube if you have any questions, if you got any feedback, any constructive criticism, I am always listening. And while you're down there on YouTube, hit that thumbs up button for me if you like the video tonight. And don't forget to subscribe to our YouTube channel. That way you never miss a great video here from School of Trade. And don't forget, if you want to talk to us here in the office, I'm always here, right? And if I'm not here, that phone number will ring right to my cell phone. So feel free to call me toll free. That number is in the upper right-hand corner. I realize that most websites are all automated robots these days, but I'm old school, right? I actually use my phone to talk to my clients, and I really hope I get a chance to speak with you as well. So call that toll-free phone number anytime you want. I'm here in Los Angeles, so I'm always a couple hours, right, ahead of things. Anyways, let's jump right in. You know where to reach me. You know where to post those comments, right? Let's take a look at our schedule here for tomorrow. Now, we are going into the last few drops of the month of March right now. And I know, we've been talking about this all week this week, but just in case you're here for the first time, the end of the month, right? End of the month. Last couple days of the month. It doesn't matter which month it is, but what do we know about end of the month? We know the end of the month is volatility, right? Volatility. And boy, did we see a lot of that today. So end of the month, volatility always increases. So as we go into Thursday and Friday's session, we're definitely expecting more volatility, right, as we always get into the end of the month. Also, too, don't forget, this is not just any old month. This is a end of the first quarter, end of the quarter month, right? End of the quarters, of course, are March, June, September, December. And as I mentioned last night, out of all of these end of quarter months, which one is the nastiest? Usually it's the month of March. Why? Because at the end of the first quarter, all the big trading firms, they're balancing their portfolios because they want to make that first quarter profit and loss. They want to make it look great, because if you're a trading firm and you can make your first quarter look good, you can then use that as marketing material, right, to get more assets under management for the rest of the year. So the end of the month of March is big time for a lot of the big trading firms. And of course, those big trading firms are the people who are dealing with the big blocks of capital, and they're the ones that are getting in and getting out, right, to kind of manipulate their numbers so they look good for all the bookkeepers, right, and they can put those on their website and start handing out business cards into that second quarter to raise more AUM. So that's why we expect to see more volatility into the end of the month. We're also watching rollover right now. I've got rollover watching on gold either tomorrow or on Friday, probably going to be tomorrow. We'll talk about that as well. And then, of course, speaking of tomorrow, what do we have here on the schedule tomorrow? Besides one hell of a lot of speakers here, you'll notice here we got speaker. I mean, there's a ton of speakers tomorrow, right? Why are speakers always important? Because what do speakers do? Sound bites, right? Quotes. You're going to be seeing lots of headlines tomorrow morning about so-and-so said this, and she said that, and he responded to this, and so-and-so thinks it's that. All of these speakers make for great headlines. And guess what? I'm not sure if you guys have been paying attention or not, right? But people actually trade off those headlines and they move things around. So lots of speakers tomorrow back and forth. That is only going to increase the volatility that we're seeing. And of course, the big news tomorrow morning is that GDP, right? That GDP, this is the first quarter GDP. If you're wondering why these markets are kind of coiled up in the fetal position here tonight, it's probably because of that GDP number tomorrow, right? Everyone's wondering, will that GDP number be big affected by the government shutdown? Will that GDP number be affected by the Mueller investigation? Will that GDP number be as good as they're expecting, right? Or will it be a dud? Everyone's kind of waiting on that number tomorrow morning, and I will be definitely there with all of my clients tomorrow at 8 o'clock Eastern time. So what this really means for us is in the overnight session, okay, if it's not moving, don't push it, because you know what they're waiting for. They're waiting for that GDP report tomorrow morning at 8:30. I would imagine by 8:45, 9 o'clock tomorrow morning, we are going to get a good feeling for how this market is responding to whatever the number comes out. You'll notice I'm not talking about the actual number itself. The number itself is irrelevant to a professional trader. We know the number itself is so easily manipulated, and it really has no bearing on how the market responds. What we care about is the reaction to that report tomorrow morning. So, 15, 20 minutes after that news comes out, 8:45, 9 o'clock into the opening bell on the NYSE, we're probably going to have a lot more information, right, about what this market wants to do. So we'll be there tomorrow morning, bright and early, right? A front row seat tomorrow for the 8:30 news, and of course, lots of Fed speakers tomorrow. Come join me. Don't forget, you don't have to do this alone. Do it with me tomorrow morning in our trade room, and we're going to have a great day tomorrow. Speaking of tomorrow, let's grab some charts here tonight. What's the plan here for this evening? So we're talking about blending, right? We're talking about blending ranges, right? And what I want to do here is just kind of remind us, right, what the overall plan is. Here on crude oil, we have two basic ranges, right? We get the range from yesterday, right? Pretty much that range from yesterday, which we talked about in last night's newsletter, right? That was the range that told us look for that 1-2 try run back higher here. So there's your range, right? That's the range from yesterday, right? And then of course we got that range here from today. What I want to talk about though is how do we trade ranges? Real quick, right? Real quick. Range bound markets are what? Balanced, right? The key word is when you see a market trading sideways on the screen, right? The key word is balanced. That's why the markets go into ranges, right? The moving average flattens out, et cetera, et cetera. Now, whenever I have a trading range, I want to buy low and I want to sell high, and I try to avoid the middle. So stay out of the middle. Market goes down, I want to buy it back up. Market goes up, I want to sell it back down. Now, I'm going to talk more about the individual patterns that we'll use to do that in just a moment, but that's the general idea. So when I see a market, right, when I see a market that runs down below that range, what do I know? I know the odds are pretty good we're going to go back into that trading range. Now, think about this for a second, right? What if on the way back up into that trading range, what if we had another range down here? Right? What if we found another range here? Now think about this for a second. We have the bigger range telling us that we probably want to go back into the bigger range, but now we've got this smaller range. What does a smaller range tell me? It tells me that, well, first of all, if we go down, I want to buy back up, and that seems to be a pretty good idea, right? Because then you're kind of going all in the same direction, right? You're buying low in the small one, and you're buying low in the larger one too. That seems to be a home run idea. That seems to be the easy one, right? That's the easy one. What if we go higher, though? If we go higher, what happens above a range? We try to sell back down in. But boy, oh boy, that's going to be difficult for those sellers, right? Because remember, this bigger range is trying to go back into it. So what do you think we could do here? Do I want to sell that high? Probably not. What I'd rather do is look for a way to see if those sellers would fail so I could buy into their failure. Right? If there was any way that I could identify a failure there, then all I would do is wait for the sellers to sell it and then buy into their failure. Now we're talking. So I use the larger range to kind of plan the direction, and I use the smaller range to kind of give me the logistics of it, right? How do we get in? Where do we want to get in? And knowing that, I can now break down some good patterns. Now, one more thing here, right? One more thing. Now that I kind of know what the range, how we can use blended ranges, one more thing. The amount of the move below the range, we take that amount and we project it above the range. Now, these might be a little bit different here, right? We call these the pendulum swing. So again, because the word is balanced, right? The word is balanced when it comes to a range. If the market's balanced inside that range, but then we swing outside of balance, what's going to happen? Is the market going to go back in and just sit right in the middle? No, it's not, right? What would happen if I was to walk over to you and just give you a little bit of a push, right, from the right? You would overcompensate to the left. So if the market gets pushed to the downside, what's going to happen? Just like you would shift your weight to compensate for it, the market shifts its weight and the market rallies right back up on the opposite side. We call this the pendulum swing. So why is that important now? Because now that gives me some good targets to look for maybe tomorrow, right? End of the day tomorrow, or maybe end of the week on Friday. And you'll be amazed at how well those targets, right, are lining up. So here's that major range now, right? We make the run lower, and now we're looking for that move going back up into that range. Here's my smaller range, right? So now we know I want to buy below that low. right? Because that's where I want to buy the low of the small range and the low of the big range. And then if we go higher here, right? We go higher here, what do I want to do? I want to look for a way to buy, but I got to anticipate the sellers are going to try to sell that, aren't they? Okay, then where's my targets? My targets are back inside the major range, but remember the size of that move now, right? Watch, size of that move now. Take that size now. I like to use my special purple, right? My special purple color there. You can use whatever color you want. It won't affect your trades, I don't think. And of course, right, we'll get that pop back up. So that now puts us all the way now, conveniently here. Get that off there. Right, all the way up around that $61 a barrel area, right? We've talked about that 61, right, a couple times, haven't we? It'd be right above that high from earlier on in the month of March. Like I said, probably not going to be tomorrow, right? That big 61 target, probably not going to be tomorrow, but who knows? By the time we're done this week, we may definitely be singing, right, a different tune. All right, so now that we know the basic idea here, let's put this to work here, Joe, right? How do we do this? Well, I got my trading range. Right? How do I buy as we go lower? Right? How do we buy as we go lower? There are two basic patterns that I'm going to look for. Let's dig in here real quick. Let me zoom in a little bit closer here for us. Okay? Here's the first one. The first one is we called a major two-try failure. I want to see price go down. I want to see these sellers try to get outside this range. You know, remember, there's that big move down, and anytime we see a big move down, we are always going to see an attempt to go to that second leg. Okay, so we're expecting to see these sellers, they're going to probably try to get that move going lower. And if they do, what's going to happen? Moving average comes over, right? As that moving average comes over, we're going to see sellers sort of sell that pullback. And as those sellers sort of sell off that pullback, what's going to happen? Buyers are going to start getting excited because now we know if those sellers fail, where are their stops going to be, guys? Their stops will be right there, right? That's where the sellers' stop losses will be. Now, why is that important? Because how do you get stopped out of a sell order or out of a short position? You buy your way out, right? You aren't magically, right, taken out of your position. How do you get out of a short position? You become a buyer, right? Your stop loss is a buy order, right, if you get stopped out of your short trade. Now, why is it important here? Because I want to buy this market. And what a better way to buy it than buying it right when all the sellers are becoming buyers, right? Then I've got the buyers buying low, and I have the sellers buying low as well now, right? That is what we call a two-try failure pattern. Now, from there, I've got to remember there's overhead resistance up there at 48. I don't want to chase after this market. So instead, what I'll do is I'll wait for the market to pull back and look to buy that pullback. Right? This is a very common combination setup, right? It's a failure pattern into a pullback pattern. All right, but what if it goes stronger? We've got that strong move down. What if we really bury this thing going lower? How do we do it then? Let's say we really make a run as we go and we actually retest that low. If we retest that low, that gives these bears a significant advantage. I'm talking about the sell side in a moment too, by the way, guys. If we do see that retest of that low now, then what do we do? Well, at that point now, I have to respect that bear momentum. So now I'm going to look for what I call the crown reversal pattern. Watch closely here. I'm going to wait for the sellers to sell off the moving average. Okay, now we're not going to buy this thing yet like we would earlier because that momentum will be too strong. What I'm going to do is I'm going to look for a second try for those sellers and then look to buy off of that low. However, in this particular pattern, though, what I really want to see is I want to see a trap. And this is why I call it a crown reversal because it almost looks like, right, a crown, right? Now, what's happening is I'm going to let those bears sort of sell off the moving average. Again, this is if we retest those lows, right? Let the bears sell off the moving average. Let them try again. I'm looking for that little trap, nice strong signal, and we can buy right off of that low. So again, slightly different pattern. We call these crown reversal patterns, my favorite of all those trend reversal setups. So now we've talked about 2, maybe 3 patterns so far here. What if the market doesn't pull back here for us? What if it runs higher here? Well, what's the concern? The concern is what do we do above the high of a range? We sell the high of a range. So I have to assume now as I go higher, what's going to happen? We're going to see sellers. Now put yourself in the shoes of these bears. How many times do you think they're going to try to sell the high of that range? Once? Twice? Probably twice. And that's exactly why I like to use a very specific breakout pattern called the two-try breakout. We go up, we break out, let the bears try once, let them try twice, and looking to buy right into their failure. 1 and 2. See, I think you'll agree this is just common sense, right? Above the top of that range, this is not something magical, right? We expect to see what? We expect to see sellers up here. And how many times do you think those sellers are going to try? They're not going to try once and give up. They'll try once, they'll try twice, then everybody's locked in. And once those sellers try twice and failed, now I know exactly where their stops are. Okay? Those are 3 easy ways to trade this market tomorrow. And guys, I have so many more ways that I want to share with you here tonight. But the problem is I've only got so much time here, right, on this YouTube video. So if you want a much deeper dive into things like failure patterns, crown reversals, two-try breakouts, grab yourself the free trading course. I've put together, boy, I get so much great feedback about this free course all the time from our clients here at School of Trade. I've got a free trading class inside the members section of our website. I'm going to put that link up there in the upper right-hand corner for you. I'll also put a big red button down here, and that big red button will make it easy for you to join, right, if you're here on the blog right now. Now, I promised you earlier, how could we sell this market right now? What do sell opportunities look like right here for tomorrow? One is going to be a two-try failure. 1, 2, and back down we go. If we see these buyers trying once, trying twice, I can use that same two-try failure, right, running back down again. Now, we talked about this last night, right? If it blasts higher, breakout, 1, 2, up we go, right? But if it runs up, pulls back, tries again, they can't get away from that moving average, yep, now you know we're selling it back down into that trading range. What if the market goes lower though? Couple different things you want to think of here as the market goes lower. First of all, do we 1, 2, 3 lower? If we do, now I can find that new channel and I can sell off the top of that channel. Okay, that will be a pattern that we'll look for tomorrow. Again, strong move, right? 1, 2, 3, then we sell. Okay, we don't try selling here because you're selling right into that low. You wait for that follow through, then you can be a seller. Okay, now another thing to keep in mind is if we sink back down and we start going into another range down here, if we see a range, bear market now we know 1, 2, and failure from there. Let those buyers try once, let them try twice, and we're selling back down in. Guys, don't forget, right now we're blending these two trading ranges, looking to get long on the way up to that big round number and possibly up to that next big round number, right, at 61 later on in the week. We're going to put this whole plan together tomorrow morning and do it together at 8 o'clock Eastern time. I'd love to have you there right there with me. Now, let's keep going. How about some S&P here? S&P, same basic idea, right? There's your main range. We go down. We're trying to go right back up now. In the meantime, we see a short-term bull market into a smaller trading range. Got some nice bullish momentum on this into a short-term range, right? I want to buy down here. I want to buy up here. What are some patterns we could use for this? And don't forget, the S&P has that distinct advantage now because I can connect those two highs, bring it down to that low, and this creates that hidden channel, right? I love to use hidden channels. When markets reverse, draw off that high, down to that low, and now that gives you a great little support level here. And you'll see it really lines up nicely. We can now blend together the two ranges, but we can also, of course, add on that hidden channel, and boy, does that become a great spot, right, to find a buying opportunity. And again, like I mentioned earlier, the amount of the move below the range now, of course, is the amount of the move above the range. And look where this puts us, right? Quite interesting how it puts us right back, right, to that high earlier on in the month of March. Again, I would say it's way too early to call 2860 right now, but I'll tell you right now, that trading range is certainly lining up well for a retest of that high here in the medium term. In the short term, though, how do we play this game? Let's dig in a little bit closer here right now. Most important thing, we know we're trying to go up here right now. I've got that trading range. What are some patterns to look for? Well, here's one right here. I got a 1, 2, 3. Draw a trend line down overhead now, right? Draw that trend line down. Now, remember that two-legged pullback, that two-try failure pattern, the 1, the 2, the up, and the over? Remember that pattern from oil? Well, now this one's a little bit different. This one's called a two-legged pullback pattern. I call it a two-legged pullback because of what it looks like, right? It's two legs, 1 and 2. The key here is you draw that trend line down. Now, think about that same two-try failure. 1 try, up, over, 2 tries, right? We call this a two-legged pullback pattern. And again, because it has 2 legs, right, on that pullback. You can blend these together, right? So imagine now we draw that trend line down. I've got my two-legged pullback here now. Moving average comes over. I now can see the sellers trying to sell off the moving average. Oh, sorry about that. Wrong button there. Right? I assume now those sellers are trying to sell off the moving average. They came up. They're trying to sell off the moving average, right? The bears are trying to sell that pullback to the moving average. Where's their stop now? Yeah, stops are hanging out there. So now we've got stops all hanging out. Stops are exposed, right? Whoops, your stop's hanging out, right? It's sitting there now above that high. Now I've got 3 options here. Two-legged pullback, failure, and pullback pattern, right? Two-legged pullback, right, comes in off of the top of that trend line. Again, you're using it as a support level now. Draw the trend line down, use it as support. Then you've got the failure pattern, right? The 1, 2 failure. And then, of course, we don't want to chase after it. We buy the pullback off of that, right? Again, usually it's right around that same place, right, as the entry. As those sellers get stopped out, we're buying into those stop losses, right? So there are 3 patterns I'm watching for tomorrow, right, as this market pulls back. What if we sit right in the middle here? If we sit here, we do nothing, right? Just sit tight. If we sit right in the middle, you wait here, wait for the 1, wait for the 2, and we'll buy it up from there. Let those bears try once, let them try twice, and we'll buy into those stop losses as we go. And again, I've got my eyes right on that hidden channel area, just because again, it lines up nicely with that range expansion, right, as well as right that hidden channel low. Now, what if the market goes higher here? If the market goes higher here, what do I need for a breakout? First things first, strong move up. Then what? Sellers. Remember, top of the range, we're expecting to see sellers up there, right? We're expecting to see sellers up there. So I'm not going to buy that breakout. Strong breakout, bears try once, bears try twice. We're buying into the failure now. What do we call that? Again, that 2-try breakout pattern, right, as we go. And I'll be honest, sometimes we don't get it. Sometimes what we get is the 1, 2, 3. If we get a 1, 2, 3 going higher here, I don't want to buy way up here, right? That'll be too aggressive. So what I'll do is I'll mark up that low, I'll mark up that high, right? And I'll look for that pullback back to that sweet spot. You always want to buy low. Even if we get those sellers trying once, selling twice, you still want to buy that pullback, still get that support level, and we can buy right up from there as we go. Now, how do you be a seller on this right now? What does sell side look like? Sell side, we go up. The buyers now, of course, try to buy the pullback. They don't get anywhere, and we sell into their failure. Okay, 2-try failure pattern. What if we go lower? What do we need to be confident going lower here? To be confident going lower, 2 types of patterns. One would be a strong move down. Buyers try once, buyers try twice. We're selling into their stops. Remember, that requires a very strong move down. Buyers try once, buyers try twice. Your stop's hanging out, right? And we sell into those stops. Where's our target? Target's a retest of that low. What else might happen? We may also get the 1, 2, 3 run. If this thing really runs lower here, mark that low, find the new channel, and we can sell off the top of that channel. Again, we'll watch and see what we get off that pattern as we make right that move lower. For now, though, I'm looking for some buying opportunities right now here on the S&P, going right back up into that main trading range that we spent most of the morning chopping around inside. And boy, wasn't it a fun range to watch. Down, up, down, up. That was a very entertaining session this morning. Then, of course, we had that big drop down. They got their big round number and then right back up again. Not to worry, though. Again, tomorrow morning, 8 o'clock Eastern time, we'll put the whole plan together here. Over on the Nasdaq, with the risk of sounding like a broken record here right now, I think we all know the plan here on the Nasdaq right now. We got that main trading range, right? Got that main trading range. We, of course, leave the range. We now want to come back into that trading range now. While we're on our way, we see a small, kind of a minor variation of that trading range. That tells me I want to buy low. It tells me I can buy high with the right breakout pattern. Okay, where's my target going to be? My target for the buys will be back up to retest those highs right below 7,400. And then where's the pendulum swing? You got it, right? Remember, range-bound markets are what? They're balanced. We swing out of balance. We come back into balance. Momentum is just too strong. Again, imagine you walk up to me and you kind of push me from one side. Okay, I'll lose my balance at first, but then I'll overcompensate, and that overcompensation, right, where's that target? Boy, it puts us all the way back up around that 74.80, and sure enough, 74.80, not as close as the S&P, but we're definitely in the right direction at that point, though, right, getting ready to go back up to retest those highs there, 75, right, 44. Okay, so let's dig in here. Basic principles are the same here. Right? I'm looking for the market now as we dig in here a little bit closer, right? I want to see us down, right? Get this move below the range. I've got this strong move down. Anytime we see a strong move in one direction, we expect to see an attempt, right, at that second leg. So knowing that we should see sellers make that move, I've got these two highs lined up off that low. That creates a beautiful level of support down there now. Right? That creates a beautiful spot there, right, for support. So love to buy off of that support level. I've also got this trading range here. Take the size of that range, copy and paste it down. That creates support. Copy and paste it down. That creates support. With me so far? Right? Everybody doing so well so far? Okay, don't forget questions. Drop them in the comments section, right? Hit those comments up in the comments section below. What are some patterns to look for right now? Right? Couple different things that you want to think about. One is going to be that two-legged pullback. Oh, let's do it this way. Draw the trend line down, right? 1, 2, up and over, right? That's one pattern. Two-legged pullback. The other one would be strong move down, moving average comes over. The bears try to sell off the moving average. Oh, your stop's hanging out, buddy. Hey, your stop's hanging out, right? We buy into stops. Oh, whoops, sorry about that. Didn't see that, right? Stops hanging out, buy into those stops. I'm kidding around with you, obviously, here. Gotta find some, trading educators are always so boring, right? Try to keep it spiced up a little bit, right? If we're going to spend as much time at the desk working together, we might as well have some fun with it. There's my two-try failure, my pullback pattern. And then what was that, like crown something? Yeah, the crown reversal. Let's say we make a real strong run, right? Let's say this thing really makes that strong run, right? It's really, really strong. Not just a little move lower and whoops-a-daisy right back up, right? I'm talking, what if this thing really makes a run here? Then what do? We look for that one try, that two try, and that trap. Right? That's the buy coming off of that low. Let the bears try once, let them try twice, right? And there's that trap now coming off it. It's a very similar pattern, but because of the overall strength of that move, we have to make sure we really get those sellers to wrap that rope right around their neck, right? Because if it's really that strong going lower, you're not going to see the bears. They're not going to give up after the first try. They'll come in and do it again, right? You'll see that a lot of times, right? Big, for example, right here. Big strong move down, right? The bears are not going to give up on that first try. You see most of the bears were waiting back here, right? You wait for that second try and then bam, right? Everybody, see what happens right there? That's because at that point, everybody's wrong, right? All the sellers are in at that point. You got to remember, a lot of people, right, what they'll do is they see a strong move down, they'll put half their position on here, then they'll put their other half on right here. So, some large account traders will go half in there, half in, right? So they'll add to their position. They'll scale to their position, right? Once they're wrong, they get out of their full position, right? That way, if they're right on the first one, they make the money in the first one. If they're not right, though, they still save some bullets. They can make them in the second one. But once that second one fails, whoops, everybody's gone, right? The aggressive sellers, the more conservative sellers. That's why when I see if it's a real strong move down, I wait for that, right? And then again, look for a trap, right? I'll tell you, traps are remarkable when it comes to reversals, right? Just find a little trap. See it right there? Little trap. Traps are great because traps allow you to buy as low as you can buy. Traps are also great because the name trap, what does it mean? It means you're trapping in those breakout sellers. Believe it or not, there are actually rookies out there. Well, usually what happens is, see, breakouts work on illiquid markets like penny stocks. So a lot of people that blow up their accounts in penny stocks or low float stocks, they come to futures, they try trading the same way in futures as they do in stocks. And of course, that's an old penny stock trader right there, right? Trying to sell that breakout. Those are that's uneducated traders in the futures industry. That's all. In futures, we fade breakouts. We don't trade breakouts. There's no right or wrong answer. It's just different markets. Futures markets are 2 liquid trade breakouts, right? So those breakout traders here, they're trapped in now. Now you've got sellers. Everybody's roped in and we're buying back up. We'll talk a lot more about that in our membership classes, but that's what I'm looking for, right? So as we go lower, right, 2-legged pullback here, up and over, right? 1, 2, failure into pullback. We've talked about these patterns, right? A few times already. Or it's that strong move down, and then up from there, right? We go back up from there. How about going higher here? And again, quick review here, right? Going higher, strong move up, 1 try, 2 try, buying into those failures. Sellers are not going to give up that easily. Make them try twice, right? Make them try twice. You can see an example right here, right? Watch. Strong move up, right? Strong move up. Look, 1, 2, bing, right? Retest that high. That's the same basic pattern right there. Strong move up, 1, 2, go, right? Same basic idea over and over and over again, right? Quick first target, leave that runner and go from there. All right, guys? Nasdaq's pretty straightforward, right? Same basic idea as the S&P. How about some gold? Now, I gotta be honest, I was on the fence tonight on gold. I almost did the analysis on the 619 contract because you may not be aware of this, but gold rolls over every 2 months, right? That would be, of course, the 12, the 2, the 4, the 6. Just remember, gold is even numbers, right? So we start off in December, right? Then, of course, it's, right, January, February, right? March, April, right? May, right? And of course, June, every 2 months. All right. And I'm really that good at counting too. So again, we're on the 416 right now on gold. The next front month, right, will be the 619 contract. And how do you know when it's time to roll over? You can see the volume is very, very close right now. I've got just a hair more volume on the gold. So what happens a lot of times is a lot of times you'll see what we call sharing volume, which means you've got half the market trading the 419, the other half is trading the 619. Is there a wrong answer to this? No, there isn't. You could trade whichever one you want. Your broker's not going to call you and slap you around if you do the wrong contract. It's not going to be the end of the world. It's just you want to trade the contract with the most amount of volume because more volume means more reliability with your patterns. Okay? So I'm going to do the 419 tonight, but as soon as that 619 becomes more volume, and all I'm doing is I'm looking at this number, right? The total volume. Okay? Don't overcomplicate this, guys. If you take a trade on the wrong contract month, it's not the end of the world because it's not expiration. Okay? This isn't like you buy and all of a sudden I got a couple tons of gold being delivered. Not that'd be a bad thing, horrible, right? But you get the point, right? This is not expiration. This is rollover. And I teach all about rollover in our beginner classes here at School of Trading. Very, very simple. So watch that volume here for tomorrow. Now, most important thing right now, we see a bear market into a trading range, right? Bear market range. This is really important. The fact that we're bearish into that trading range is the most important clue. What do we do with a range? We sell high and we buy low. Okay, we sell high and we buy low. But because I have a bear market, I can sell high pretty aggressively, right? I can sell with buyer failure. I can sell high pretty aggressively. I can use pretty much any pattern to sell high right now. The problem, though, is to be a buyer down here, because I'm going against that bearish momentum, I have to use a very specific type of entry pattern. And we've already talked about it here today, those crown reversals, those nested 2 tries. So we're going to break that down here, right? I want to be a buyer because I think we're going to be probably in a situation where we might be able to play both sides of this market. I've got, of course, that big leg down, the pullback. That gives me now my measured move. So my measured move is right there. That's what do we call that, guys? We call that the objective. You always want to know where is the market's objective. Okay, the market's objective is usually going to be a range rotation, a channel rotation, a measured move, a retest of a high or a retest of a low. So we know there's an objective down there, right? Mission is accomplished around that 1306. So why is it important? Well, because I would expect with this strong move down here, I would expect there are some traders out there that probably aren't looking at the bigger picture. They're probably just looking at the smaller picture. And as they look at the smaller picture, what are they going to do? They're going to probably try to sell, right? Sell some traps, sell some failures. And when they try to sell, when there's not a lot of room down here, it leaves them wide open for a failure. And what happens when a market fails bull range? The pendulum swing. So think about it this way. The market's bearish right now, but if I was to sell this market, where's my target? My target's at the measured move. So that's my reward, right? A little bit of risk, not bad reward either. Not that bad. But if I can time this correctly and I can look for these sellers to try a couple times and be a buyer here now, where's my reward now? Yeah, remember that pendulum swing idea? Yeah, that could be a pretty handsome reward out there. So the reward going higher here right now is a lot more attractive, right, than going short, right? It's much more attractive to be a buyer right now than be a seller. Now, do not let that fool you, please. Okay, it's a rookie's mistake to say, well, we have a lot more space overhead. It's a better risk reward, therefore I should be a buyer. That doesn't work. Most of us have made that mistake. And we go, but look, take the trade. It's a better risk reward. Risk reward is great. That gives me the incentive. But it doesn't negate the fact that we are still very much bearish right now. So I need to find a way to buy this market, to capitalize on that good risk reward. But to do that, I need to let these sellers really wrap that rope right around their neck, right? Because I got to make sure that I'm buying into the stop losses of those sellers. So what's the plan here? Well, what do we have? Strong move down, lower low. This, in most situations, is going to be called a spike in channel, right? Now, spike in channels, if you don't follow my YouTube channel, you might have heard these before. Spike in channels are very, very common. And the most reliable part about spike in channels is that you can look towards the base of that channel, and that's usually where the sell comes in. It's a trap, right? It's like a trap high, right? It's a bull trap, right? You wait for the market. The market looks remarkably convincing when it goes higher, and so buyers oftentimes get in trouble and the market sinks right back down in. So what you want to be aware of is that when I see a spike in channel, I expect to see sellers up around those highs. Now, if I go back to my chart, spike down, there's my channel. Okay, there's my spike in channel. Where do you think I'm going to start seeing sellers? Right up here, right up inside that battle zone. So I need to make sure that I've got sellers participating up there before I can start looking to be a buyer right now. Right? So now, how do we do that? I know I've got some sells up here. I know I got some resistance up there. At this point now, I want to see those sellers try off the once, off the twice, and up from there. I want to see the 2-try failure here. But again, because we're bearish overall, I've got to let these sellers. If this was a bull market, I'd be going 1, 2, failure all day long. But it's not a bull market. It's a bear market. And I'm expecting that sellers are waiting right above that high. I'm expecting sellers are waiting right above that high. They're saying, come on, just give me that chance to sell high here, and I'll bury those buyers, right? That's where sellers are waiting up there. Okay, it's just like before, right? We had that bear move down, right, into a range. What's happening? Bears are right up there. They're waiting, right, to buy, to sell into those buyers' failure. We're going to probably see something similar here. So as we go lower, there's my channel. I'm expecting now to see sellers waiting up there. Make them try twice. Once off the high of that channel. Second one off of it. I hope we can use the top of that channel. Let those sellers try once. Let them try twice. And we're buying, literally buying right into their failure. Okay, stop goes below that low. Target, of course, up at the top of that range. Runner target is that big pendulum swing, right? The amount of the move down is the amount of the move up, right? We'll know more about that once we get there. All right, guys? So that's the idea, right? That's the idea here, to be a buyer right now on gold. Now, what if I'm right? What if I'm wrong about this? What if we keep burying as we go lower? If we keep going lower now, we got that measured move. Now, what did we learn about the euro last night? We learned that most of the time when we get a measured move, we're going to usually go up and do it again. Okay, we saw a great example of that in the euro today, didn't we? Okay, we'll grab that here in a moment. I know I'm running late on time right now, so thank you for sticking around. So if we see this market get that measured move now, right? If they get the measured move, now I'm waiting to go up, get those buyers to try to buy the pullback and sell into their failure, right? Buyers try once, buyers try twice, your stop's hanging out, and we're selling into those stops, right? Now remember, this becomes a very different ball game if we see this market down and then 1, 2, right? A very different ball game here if we see him try 1 and then 2. If we go down, then up, buyers try, I can sell that. But if I see it go down and 1 and 2, yeah, now we're looking for that, right, for that failure going back up. We're going to walk this all together tomorrow morning in our trade room, of course, right, at the same time. All right, guys? So now we know we're looking for to be a seller, right? On a sell side, I want to go finish off that move up, failure, and back down. Again, we almost always see a measured move double tested. Okay, same thing we saw in the euro today. Or it's up, it's 1, it's 2, it's go from there. Or it's down and then up and go. Two different patterns, one for the buy, one for the sell, and it all depends on how the market responds on that pullback. All right, guys, let's keep going. Over on got the buy side, got the sell side here. 1300 is the only real other objective here on gold. So let's say, for example, we don't just hit the measured move, bounce, fail, and back down. Let's say we go 1, 2, 3 as we go. The 1300 is the next objective. Mark up that low, mark up that new channel, and that's my sell from there. So if all hell breaks loose and this thing just parties to the downside there, I'm not trying to sell into that low. I'm going to wait for that 1, 2, 3, and then we'll sell up from there. Capiche? Okay, pretty easy strategy here. I really want to be a buyer right now, but I'm not going to force it until I see those sellers once, twice, right? And again, up inside that battle zone. If they keep going, then we know the bears have more effort, right? They got more control, up, failure, and down from there. All right, guys. Again, tomorrow morning, 8 o'clock Eastern time. And don't forget, if you haven't joined that free trading course yet, I go over a lot more details about all of these patterns in that free trading class. Let's wrap it up here tonight with that euro. Again, the euro was a great example. If you recall, this was the measured move, right? This was the measured move from last night. And we talked about how it goes up, failure, back down again. A great example. The euro was packed with different trading opportunities here, right, in today's trading session. But as I mentioned earlier, we're only as good as the next trade, though. So how do we look at this? First of all, we're bearish, obvious bearish momentum. This one's not going to be as critical to be reversing, right? We get that bear move into a trading range. What do we do with the range? We buy low, we sell high. We sell high, we buy low. Now, we get a great example of a two-try failure above the high of that range. Great example of a two-try failure, right? Above. Those are perfect. So if I go back up again, because we have overall bearishness, I can sell right into those stop losses. Right? Stops hanging out, right? Let the buyers try once. Let the buyers try twice. I can sell into those stops, sell that pullback, two-try failure, breakout pullback. Okay, just got to make sure, remember that pullback pattern. The pullback pattern on here is always a tricky one because you want to make sure you're not doing it too low, right? Got to get up above that top of that range. But two easy ways to sell it above. Now, what about the buy side? Buy side is measured move. There's your big objective, right? So the bears are trying to get back to that 13,000. You got 1,300 on gold, 13,000 on euro. So what are some ways we could do this, right? How do we buy off this low? We buy off the low with two different types of patterns. One is, I've got my pendulum swing. The amount of the move above the range is the amount of the move below the range. Okay, so if we hit the pendulum swing, then what? One try, two try, back up in, right? Bears try once, bears try twice, back up in. But if they blow through it, right? If they just torch right through it, right? They run down to that measured move. Now what do we do to buy it? Crown reversal. 1, 2, trap and go. Why do we look for that trap? Why is it different? Why do I go, right? Why am I okay with a two-try nested? And again, I have different names for these because they describe what I'm doing, right? Nested two-try to buy back up. If we really run lower, the momentum is way too strong. We achieve the objective. Let those bears try once. Let them try twice. Look for a trap because those traps are going to get you in as low as you can there. And your risk-reward ratio on that is just phenomenal. All right, guys? So sell above those highs. Buy above those lows. I know I sounded like a broken record a lot on this right now, but hey, repetition is the stone that hones the knife of success, right? Repetition is the mother of skill, or whatever the metaphor of the week is for repetition. But hopefully this repetitive nature on this newsletter, hopefully it's getting those light bulb moments right coming for you here. One more thing here. How we reverse in this goal on this euro? What would a buy look like as we go higher here? Strong move up. What do we want? One try, two try. Remember, higher highs, right? Higher highs here. One try, two try. Buy back up. What do we call that? We call that the two-try breakout. We talked about that on oil earlier, right? So if we do go higher here, we go down, right? It's a 1, 2 up. We go higher, big strong push up. Remember, if it's anything, right? If it's anything just up, pull back, failure, or it's strong move up, bears try once, higher high, bears try twice. Now what? Now everybody's in, and then we buy right into those stops. Boy, oh boy, guys, we've had a great week. We've had a great month, and we are not done yet. Don't forget, we're coming right back here tomorrow, 8 o'clock Eastern time, like we always do. Make sure you join that free trading class. I put a link up top there in the upper right-hand corner for you. Join the free trial right here on the homepage at schooloftrade.com. Don't forget, that free trial will include your free trading course along with a free pass. Come out and join me as a guest in our trade room. While you're here, don't forget, we get a toll-free phone number. I got live support here to use. We got 3 levels of membership, and I'm always here to help. So don't be a stranger. Pick up the phone, use that live support tool, jump on Skype, whatever the easiest way is for you guys to reach out and get more information. Hope you learned a lot about the topics covered tonight. Hope I see you tomorrow in the trade room. And as always, if I don't see you guys tomorrow morning, I'll see you same time, same place tomorrow evening on our next edition of this nightly newsletter. Thank you so much, boy, almost an hour into this video. If you're still here with me right now, my hat's off to you. Thanks for joining up and sticking with me tonight on this video. As always, be well out there. Be nice to each other, will you? And we'll see you guys next time. Adios, amigos. Bye-bye for now.